Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
All right, we've got 5 big stories for you today. First up, the AI boom is creating a genuine power crisis, so much so that it's prompting a $90 billion investment and a wild plan from Microsoft to restart the 3 Mile Island nuclear plant. Then we'll look at why the world's most important chip company, ASML, saw its stock tank 8% even with record orders, and how its CEO is warning that US tariffs could derail the entire AI supply chain. After that, a story that sounds like science fiction, crypto firm Tether just spent $600 million on a farm. We'll unpack their plan to tokenize crops and then use the farm's own power for a massive Bitcoin mining operation. Next, a stunning deal in space. Amazon is paying its biggest rival, Elon Musk's SpaceX, to launch its Project Kuiper satellites as it desperately tries to catch up. And finally, the wearable company Whoop is going head-to-head with the FDA over its new blood pressure feature, accusing the agency of overreach and facing a tight 15-day deadline to comply. Let's get into it. The AI revolution is happening so fast, it's threatening to break America's power grid. After nearly 2 decades of flat energy use, US power demand is suddenly hitting record highs, and it's creating a full-blown crisis. To fight this, President Trump just convened an emergency summit of tech and energy giants to announce a staggering number, $90 billion in new investments for AI and energy just for the state of Pennsylvania. One senator is already calling it the next industrial revolution. The spending spree is already underway. Google is dropping $25 billion on new data centers and just signed a massive $3 billion deal for nothing but electricity. iFirm CoreWeave is building a $6 billion data center. And to handle the surge, energy company First Energy is pouring $15 billion into upgrading the state's grid. The guest list for this summit is really telling. You have the CEOs of tech giants like Meta, Microsoft, and Google sitting down with the CEO of ExxonMobil. This isn't just a tech story anymore. It's a power play, literally. So the thing is, big tech is scrambling for juice, and the White House is now considering executive orders to fast-track new power projects and open up federal land for data centers. And make no mistake, this is all part of a high-stakes technological arms race with China for AI dominance. This is where the situation takes a truly surreal turn to power its AI ambitions. Microsoft is now backing a plan to restart the infamous 3 Mile Island nuclear power plant. Yes, that 3 Mile Island. The demand for AI is so intense, it's bringing a notorious nuclear facility back from the dead. As the US goes all in, the real question is, can the lights even stay on? We were just talking about the massive power demands of AI. And that brings us to the very heart of the supply chain that makes it all possible. Shares in the world's most critical chip equipment company, ASML, just had their worst day in months, dropping over 8%. If you think that's just a normal market fluctuation, the main course is just being served. This happened on the same day the company announced its new orders blew past expectations by a massive 25%, fueled by the global AI boom. So the disconnect boils down to a single massive threat that could derail the entire tech industry. Potential US tariffs. ASML, makes machines so advanced, they are the only game in town for building the cutting-edge chips that power everything from Nvidia's GPUs to Apple's iPhones, a potential 30% US. Tariff could skyrocket the price of a single one of these machines from 250 million euros to a staggering 325 million euros. The uncertainty is so severe that ASML's CEO, Christophe Fouquet, just went on the record with a stunning warning. He stated the company can no longer confirm it will achieve revenue growth in 2026. If that happens, it would be the first flat year for ASML in over a decade, breaking an uninterrupted winning streak, stretching all the way back to 2012. Because of this, major chip makers building factories in the US are now hitting pause, delaying investments, until they know how bad the financial damage will be. Even giants like Intel and Samsung are grappling with the fallout. So while ASML's order books are full today, the geopolitical storm on the horizon is threatening to capsize its future. This isn't just about one company's stock price. After all, ASML is the choke point for the entire global tech supply chain. The real question is, Could a trade war accidentally sabotage the very AI revolution it's supposed to be protecting? From unexpected geopolitical risks to a business strategy that is really out there, the most unexpected news in the digital asset space today has to be this. The world's largest stablecoin company just spent over $500 million to buy a farm. Crypto powerhouse Tether, the company behind the $143 billion USDT stablecoin, just dropped a staggering $600 million to acquire a 70% stake in Adequagro, a South American agricultural giant that produces everything from rice and sugar to ethanol and dairy. And their goal isn't just to get into the food business. The real target is the multi-trillion-dollar global commodities market. Tether's pitch is to rip the guts out of the old system. Right now, if a company in Brazil sells corn to a buyer in Bolivia, the payment can take over 3 days to clear through traditional banks. Using their digital dollar, that same transaction takes seconds. However, if you zoom out, you'll see another layer of strategy at play. Experts say this move signals that the crypto industry is now targeting brick-and-mortar businesses and physical assets. As one crypto exchange CEO put it, in effect, they are turning farmland, sugar mills, and renewable energy plants into programmable financial instruments. Imagine a sugar token or a corn token on the crypto market backed by actual harvester concept. Tether says it sees significant potential in, but that's not the whole picture. The final piece of the puzzle reveals the true scale of this ambition. Adequagro's farming operations, like its sugarcane mills, generate their own renewable electricity from biomass. And Tether has a very specific use for that power. They plan to plug right in and use it to fuel a massive Bitcoin mining operation. So, to be clear, a crypto company isn't just buying a farm to speed up payments. They're buying a self-sustaining power plant to mine more crypto, effectively turning food production into fuel for their digital empire. From one stunning corporate play to another, we're now shifting our focus from the ground to the stars. In a move that's sending shockwaves through the space industry, two sworn enemies have just announced they're getting in bed together. Amazon just paid its biggest rival, Elon Musk's SpaceX, to launch its competing satellites into orbit. The reason Amazon would hand cash to the very company it's trying to beat boils down to two things: a ticking clock and a staggering amount of pressure. You see, Amazon's Project Kuiper is facing a hard deadline from the Federal Communications Commission: get about 1,600 satellites into orbit by July 2026, or risk losing its license. To put the desperation into perspective, after this latest launch, Amazon has a total of 78 satellites in the sky. Its main competitor, SpaceX's Starlink, has roughly 8,000. Amazon isn't just trying to catch up, it's trying to close a monumental gap against a rival that already dominates the market with 5 million customers. This is one of Amazon's biggest and most expensive gambles, with over $10 billion already invested in Project Kuiper. Analysts estimate the final bill could climb as high as $23 billion. The prize is a piece of a satellite internet market expected to be worth at least $40 billion by 2030. But to even stay in the game, they had to make a deal with the enemy. This whole saga, of course, is a battleground between two of the world's wealthiest men, Jeff Bezos and Elon Musk. Bezos has his own rocket company, Blue Origin, specifically designed to compete with SpaceX. But with the government deadline looming, Amazon just couldn't wait. It all begs the question, what does it mean when you have to pay your number one competitor just to keep your dream alive? For Amazon, this is either a brilliant strategic move to accelerate its ambitions or the most public admission of defeat in the race for the stars. Speaking of high-stakes battles, our final story brings us back to Earth, where a tech company is in a public standoff with the US government. Wearable maker Whoop has publicly accused the FDA of overstepping its authority and operating on outdated assumptions. Now, that's a direct challenge to one of the most powerful regulatory bodies in the country. The fight is over Whoop's new blood pressure insights feature, part of its $359 Whoop Life subscription. We're seeing Whoop claim this is a simple wellness tool for athletic performance, while at the same time, the FDA is taking a completely different path, declaring the feature an unapproved medical device intended to diagnose or treat disease. The FDA's warning is stark, stating providing blood pressure estimation is not a low-risk function. An expert from Columbia University echoes this, noting there's concern that these devices are not yet proven to be accurate. Whoop for its part, is pushing back hard. The company argues that its blood pressure data is no different than other wellness metrics it tracks, like heart rate variability. They believe the FDA is trying to regulate a non-medical feature and is stuck in the past, viewing blood pressure as a strictly clinical domain. This isn't just about one company. The entire wearable industry is watching. Giants like Apple have been trying to crack blood pressure monitoring for years, while Garmin and Omron already offer FDA-regulated devices. Whoop's fight could set a major precedent for the future of health tech, and now the clock is ticking. The FDA has given Whoop just 15 days to respond, threatening regulatory action that could include seizure, injunction, and civil money penalties if the company fails to comply. The question is, will the tech innovator back down, or is this the start of a much larger war over the future of our health?
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.